Welcome to The Explainer. Today, we're digging into a source with a pretty bold argument that your financial destiny, everything from the cash in your wallet to whether you get that next job, isn't really in your hands at all.
So think about this. Who decides if you get a raise? You'd probably say your boss, right? Or maybe how well your company is doing. But the source we're looking at today says the real decision maker isn't even in the same building. It's a small group of unelected officials who have a shocking amount of power over your life.
And yeah, that's the title of the source material we're unpacking, The Puppet Masters of Your Poverty. It frames central banks, like the Federal Reserve here in the US, not as these boring, stuffy institutions, but as the secret architects who are pulling all the strings in our economy.
Okay, let's get into it. How do they supposedly do this? Well, the source claims it all boils down to a core mechanism. Basically, the Fed has two giant buttons it can push to control the entire economy. According to this source, the Fed isn't just a neutral referee. Oh no. It's an active player that plays God, creating massive economic booms where everyone feels rich and successful, and then engineering crushing busts where people can lose everything. They basically get to decide if it's sunny or stormy for the economy. And this slide right here is the key. The source breaks down their two main tools with a super simple analogy, a gas pedal and a brake pedal. The gas is something called quantitative easing, or QE. That's when they pump money into the system to speed everything up. The brake? That's quantitative tightening, or QT, where they pull money out to slow it all down. So that begs the question, right? Why would they ever hit the gas pedal? Well, according to the source we're looking at, the reason isn't just about economics. It's about politics. The central claim here is that this isn't some neutral scientific process. It's about creating the feeling of a great economy. When the economy feels strong, the president looks good, and that can have a huge impact on their approval ratings and, elections. So how do they actually hit that gas pedal? Well, it's this QE thing. The Fed basically creates new money out of thin air to buy government debt. This injects a ton of fresh cash right into the financial system, which makes banks want to lend more and encourages all of us to go out and spend.
And you can see the results, what the source calls the good times effect. The stock market goes through the roof, unemployment drops, and because borrowing is so cheap, it's suddenly way easier to get a loan for a car or a house. Businesses start to expand, everyone feels more confident, and on the surface, things look absolutely fantastic.
But, and this is a huge but, the source is crystal clear that hitting the gas for too long comes with a really painful and totally inevitable consequence. The party, it argues, always has to end. And here's the hangover: inflation. See, when you've got all this new money flooding the economy, but the amount of stuff to buy, like cars, food, houses, is still the same, what happens? Prices go up. It's simple supply and demand. And this, according to the author, is the trigger that forces the Fed to slam on the brakes hard. The source lays out this chain reaction, and it's pretty brutal. Step 1, the economy overheats with inflation. Step 2, the Fed responds by slamming on the economic brakes. Step 3, interest rates go through the roof. And step 4, suddenly the payments on your credit card, your car loan, even your mortgage, they all swell up.
And now we get to what the source argues is the most direct and most damaging impact on regular people like you and me. Your actual job, your ability to earn a living. This is that brake pedal in action, quantitative tightening. The Fed starts yanking money back out of the economy to fight the very inflation it helped create. The source calls it harsh medicine because even if it cools down prices, the side effects are, well, really, really severe. I mean, just listen to the language the source uses here. It calls the Fed the government's attack dogs. The argument is that they're basically unleashed to bring the economy to heel, no matter who gets hurt in the process. And here it is. This is the heart of the entire argument. Fighting inflation means you have to slow down the economy. And a slower economy means businesses stop hiring, they stop expanding, and pretty soon they start laying people off. The source uses the very provocative word peasants to argue that this pain is intentionally aimed right at working people. And this chart just spells it out. During the good times, the gas pedal phase of QE, hiring is high. Everyone's getting jobs. But the second the Fed slams the brakes with QT, look at that. Hiring just plummets. The source presents this as a direct cause and effect. So the big takeaway from this source is this. Your personal financial life, whether you can find a good job, whether you can get a raise, whether you can even afford a house, it isn't just about how hard you work or how the free market is doing. It's a direct result of decisions made by a handful of people pushing an economic gas pedal and brake.
And so the source material we've gone through today leaves us with this one final, really powerful question. If this small, unelected group has so much control over our lives, who's controlling them? It's a question about power, accountability, and the very foundation of our economy.